Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Knightscope, going over their Q4 results and the 2022 10K that was filed. I'm going to talk a little about the current state of the company and we'll go from there. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions expressed in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so Knightscope's Q4 results. Let's go ahead and walk through this. This was a bit more. If you look at the results in the past, let me give the preface that this one was a bit more complex because of the case emergency systems acquisition that they did. That closed in Q4, and so that includes a lot of those same results. So you have to kind of dig if you want to look and try to get apples to apples comparisons. And so that's going to be something to talk about a little bit today. Overall, real quick, it was a pretty bad quarter. I'm not going to lie to you. The robots, the revenue from their robots was down quite a bit, and I'm unsure on that, so I kind of want to have a small theory on that one that we could talk about. Their margins were actually down, and their margins were already awful. And their operating expenses were obviously up, and we'll talk a little bit about that. On the flip side, their backlog was up, and they have more raw materials in their possession, so clearly they're building more robots, and so we'll go through that. All right, moving on to the actual revenue here. So I have the table here you can see, but really it's better to look at in a graph. And this is it. Hopefully that's not too small for you to see. Let me collapse that. There we go. So you can see the full chart. And so there's actually two lines here, which are identical all the way up until last quarter. And that this is the blue line, or the blue dots here that you see, and then that blue line at the very end. This represents what they term as their autonomous security robot revenue. And these, you can see that this had been, as I've talked about, starting about mid or in Q3 of 2021, has been just going up and up and up and up and up all the way through to Q3 of 2022. Looked like it was on a pretty good upswing. And then if you just compare their total service revenue that they were reported in their scroll up, I could find that their service revenue they reported in Q4. Well, you're not going to be able to see the apples to apples numbers because they reported for the full year, but that actually was massively up, and that is the red line where it looks like it was a huge jump up. That's, I think, was the headline number on their press release, that wow, revenue was way up for the year compared to the prior year. But that number also includes some of the revenue from the case acquisitions, from the the call boxes and those sorts of things that they have. Apparently, they have some maintenance plans on those. I haven't dug in enough to. I'm not even sure of the details there to really understand that, since that's not really a core part of my thesis for the company. The core thesis for me is more on the autonomous security robot side. But for that, if you dig in their disaggregation. So if you do dig in the 10K, you can see where they are going to start splitting this out and say this was our revenue from the ASRs, and this was our revenue from the towers and the call boxes. So this was down for the quarter quite drastically. It's still higher than in 2021, but it was down. Now, it's hard to say if there was some odd reason, some cyclicality to why this would have been down. I don't think that it is. This does have me a bit worried. I actually regret that I didn't check in on the numbers here before I went to one of their town halls, or else I would have asked, Bill about this. I might be emailing them and see what they say, see if they give me any response. But I think that's this worries me. I am I want to say optimistic, but realistic that I think there have been quite a few deployments in Q1. I'm frankly not sure why this is down. But my theory that I said, hi Jay, thanks for hopping on the stream. So my one theory that I have on why this is down is I somewhat wonder if they are splitting out the K1 units and lumping them maybe under towers here. and then only counting the K5s and the K3s as the autonomous security robots. Um, I, I I don't think I don't know. But that would be one possible theory as to why this would have gone down so much. Otherwise, I'm really just not sure. There's another theory that I have that is it's possible they're retrofitting some of these robots to all be on their newer architecture, the newer K5. And it's possible that they maybe have recalled some of these robots, in which case they would sort of pause their contracts. I don't know. It's hard to say, but it also doesn't make sense to me that the revenue would be drastically down when they also have a backlog of, a backlog of clients waiting for their robots. Because for this to be down, I think you would have expected, you would think that that means people are canceling and then that those robots are sitting idle. But I think Knightscope is going to, turn these around as soon as they can. If somebody did cancel since they have this backlog. So something doesn't quite add up. We'll see if this continues in Q1. I think it'll be a little, it'll be easier to see the trend at that point. So moving on to their margins, right? And so you can see this was reported. I split out the numbers, get the actual numbers up here in Q4. And this is, by the way, only grabbing their service revenue. So if you go here, to be super clear what I'm talking about, they have their service revenue. I'm excluding the product revenue because I'm pretty sure that's all case stuff, which is, again, sort of a minority of the company. It's not really the growth story. And their cost of revenue for services. And you could see their margins were pretty bad. And if you split it out for Q4, they were even worse than they have been. They were negative 80%. And here's what it is or I guess I could go here, just the numbers for the quarter, right? They made about $1.9 million in service revenue, but it cost them about $3.4 million if you do the math there. Now, again, one thing that is a bit unclear to me is how much of this is including, the case systems, and it's unclear if I'm properly attributing the cost of service here to only Q4, just because this isn't split out. It wasn't split out all year, right? We don't have the data from every quarter that includes case, so it's possible that the way I'm looking at these numbers is not quite apples to apples. But in the chart, if I look at the margins quarter over quarter, they actually got worse this quarter, which is not good. I was expecting, as we saw scale in terms of the number of robots being deployed, for those margins to improve. And I think that's still my core thesis. So in this particular quarter, I'm just not sure. Again, I know that this may not be a very useful video for you, but that's what the numbers are, and it's kind of hard to interpret. Jay says, pretty much all startups faced reduced margin due to inflation. Yeah, and that's a big part of it, right? They've mentioned multiple times that they're paying extra for parts, right? That's what they said. Hey, we're having supply chain issues. How are we dealing with that? We are literally we're just paying more for parts. We're getting some over here and some over here. Whatever we can get, we'll pay extra, give it to us so we can get our robots going. Which actually does bring me down to, I'm going to tie this in with another one. If you look at the amount of, the dollar value of their actual robots that they had on lease or available for lease, right? They list this out, and this did go up once again, right? We see, so they had more finished robots, and so that's where I think something's a little weird in the revenue numbers. And even just the raw materials and the value of the robots they had in progress went up again, a huge jump up, right? From a year ago, this is like doubled, right? The number of raw materials, or the value of the raw materials that they had. They used to have just a tad over $1 million as of the beginning of 2022, and now at the end of 2022 they have what's that? More than doubled. 2.6, $2.7 million, and then they've got quite a bit in terms of robots in progress as well, and maybe what's that, about $1 million worth. So that's quite a bit, and so I think they have been paying more, so these values are going to be up. I think they carry these at the cost that they pay for them is what I think they recorded on their balance sheet as, and so it's not surprising to see these numbers massively up. And I think they are holding a lot of raw materials and they've ordered ahead. And you see some of these big deployments that they had in Q1, like the large deployment, the Lowe's, and just a number of other ones where I think they have been producing a lot of robots. And it's a little frustrating to get this data, 3 months delay, right? Because we're seeing the state of the company as of December 31st, 2022, and we didn't get that until the very end of March, and now time is marching forward even past that. And Jay says also going into quantitative tightening with debt isn't good. Yeah. So I would say going into it with the debt, right? Their debt isn't a floating rate; it's a fixed rate. So that's not, if I recall correctly. I don't think it was a floating rate, so I don't know that the tightening is going to directly hurt them there. Where I do think it's going to hurt them, and this goes on to one of the other things I wanted to talk about, is their actual just liquidity. And I could just pull up the some of the quotes here. They had, let's see, as of March 13th, I think is when they actually reported this. Yeah. So this is my current concern with the company, and this I think explains a lot of the current stock performance. As of March 13th, the company's cash balance was about $3.5 million. They have to, and they're going to burn about $1.5 million per month. So obviously that's real bad. At this point, they are funding the company just through dilution, through their at the money offering that they filed. I think that's they're at the money offering. They filed for up to $20 million to raise. That's how they're going to fund the company basically this year. They did lay off some folks. You can see it in the let's find the subsequent events down here. They had this cost reduction plan, and you can see that as of I don't know where it's at, but you read through here somewhere at the end of March, they said we had 92 employees, and they had 192 employees plus I think one contractor. They had 111 at the end of December, and I think they did these layoffs pretty soon, right after the end of December. So they did cut their burn rate in terms of the operating expenses. They cut their staff by about, what's that, 15, maybe 20%. And so they did cut their, but sorry, but you were going on to the debt. I think the one thing here is they also say they settled part of that, right? They issued roughly 2.9 million shares to those holders to convert about $3.1 million of those notes, which was about half of it. I would expect them to do the same, right? Because they don't really have the cash to pay that back. And while I agree with you that the quantitative tightening is most certainly not good for them, not when rates were low, right? They always had the option to go get debt or raise equity from somebody more cheaply, because other folks could issue debt, at very low rates. And so that's hurting them to a bit. But I think that if they at least extinguish this debt, no matter what rate they get, if they're taking on debt even at a 15% rate, let's say, which would be I think fairly high, but they're a high risk company. If they're able to grow over the next year, if they really do, if they can use that, let's say, to burn down their backlog, right? So maybe I'll jump over to this. I know I'm going all over the place today, but their backlog was up once again, right? And this is their backlog only for the robots. It was $2.7 million worth. I don't think they reported a number of robots in this particular. Yeah, so here's their backlog. This is as of March 19th. Their total backlog was $5.2 million in sales. And hi, Walkaza. And so that was their largest backlog by far. That includes a lot from Case, the blue light towers and the call boxes, but $2.7 million of that was for the autonomous security robots, right? So that's a lot. And $2.7 million in kind of annual revenue, that would be, where was I going with this? It was going back to, anyways, the point was, if they issued debt, that's what I was getting at, is if they could issue debt and then they can use that to get the remaining components and fund the company and pay for some of the, operational costs of, then getting these things out here and supporting them, that they may be able to, let's say they issued $10 million in debt. And let's say they even back it, they get a lower interest rate because they actually back it by some of their property, some of their robots. They did that way back when in 2018 or 2019. They had to do that. That could actually end up being a good move if they can immediately use that, to get through the backlog, get those deployed, collect the cash from customers, and use that debt for a year or two to help fund the company. That might end up being a good move for them rather than the dilution, right? Because the dilution does end up, the two things about dilution, right? Number one, dilution is forever. Once you issue those shares, they're there. Even 10 years later, you can't just pay them back. But the other bit there is the downside of diluting is that the more you dilute, the more it depresses your stock price, which reduces the amount of money that you can then go out and continue getting through dilution. So that's my one concern that I do have here. I wonder if some of the downward stock price was from this particular, where was it? From this extinguishment of the debt, right? They gave them, the company issued them shares, but if I was somebody who just lent the company money and I said, okay, that's fine, give me the shares, those folks may have turned right around and just been selling them on the market, because they want to get some cash back out of this. If they just forked over cash the company, they're going to want to get, potentially, recoup some of those costs. So that's a possibility. Jay also said, I think the NYPD pilot contract looks encouraging. Yeah, that is, I think that is a really big deal for giving credibility to the company, right? And I think it will be even, because I think there was a big step up in credibility for the company when they had the, was it Huntington Park? The police department, where they did the pilot, they did it for a year. And then, the guy, the police chief went on, their public television and talked to the council and said, the robot is great. We want to renew for another 2 years. We can do things that officers can't do. It's a good complement to our force. That gave them a big step up in credibility. I think doing something similar with the NYPD, right? We won't see the results of this for probably another, possibly a year. I don't recall if they said, I watched the video clip. I don't recall if they said that it was, a year-long pilot, or if they said how long that was. It could be 6 months. But when they come out with something, if there's some other soundbite, if it's successful, if it's not successful, we probably won't hear anything. But if it is successful, this is the sort of thing where, political figures and such might want to highlight the innovation that they're embracing in their city. For New York specifically, there's, that's where William Lee was from. So it's possible that they would even, hype that up a bit. I don't know. It's hard to say, but if there is some public statement made a year from now where the NYPD says, yes, this was useful, yes, this was the impact for us in New York City with the NYPD, right? Possibly the largest police department in the entire United States. They got a lot of credibility. That would be, I think, really good, right? That's one more huge vote of confidence, one more step up, right? That's one level down from the federal government, which is, hopefully going to be the case at some point in the future. So anyways, I don't know if y'all have thoughts on any of that. I'll just keep going through some of the stuff I had from the 10K here, and then we can kind of chat after that. I guess I talked through most of it. The things going forward that I see for the company, right? Obviously, as I've said this a number of times, converting that backlog into actual deployments. And I think, again, you see the company starting to get there, right? Where are starting to show the signs where they've got more robots on hand, they've got more raw materials and robots in progress. This is just keep going up, right? And these are all snapshots of time, meaning every quarter they have yet even more and more raw materials. This isn't the total number of raw materials they have, right? This is going up, means they have more potential to build robots every quarter, and so that's a good sign to see. And for them to use that and actually get through the backlog, hopefully that's happening soon. Hopefully they can. After that, it's all margins, right? Because I think they've got the backlog. They've shown that this can at least grow. It has at least some runway for growth. and if they make even more, if they don't entirely stop making sales, they're going to have a backlog for at least the next year. But they get through this, and then it's all a focus on margins, right? Because now they need to stop losing money with every deployment. And some of that, again, I've gone through this, multiple times, but I think a lot of that is just going to come through, amortizing their fixed costs that they have, right? They have their operations and monitoring all those robots, and helping, being on call for the clients. I think that is a fairly large operation from what I understand. And I think having more and more robots are bringing in revenue, it's not going to scale to the same degree. I also know they've emphasized this in the past. We're also talking about, the cost of parts, and looking at their actual, their actual, amount of the value of the raw materials they have on hand is also, they've talked about buying more expensive but more reliable components that are going to be, cost more to put in there, but ought to be able to operate for a longer period of time before failing, right? And so that over time will actually improve their margins, because the cost they have for replacement parts and service calls should go down. They've also talked about, they like to highlight a lot the reduced assembly time for the next generation of the K5, for that 5th generation. But I think there's also a different design for serviceability there. And so I think that might help as well, in terms of, again, bringing down some of those costs for servicing the robots, which is going to improve their margins over time. So some of my thoughts, the stock price itself is going to be, I don't see it going up anytime soon, while they are still diluting to, to fund the company. In particular, while it stays down this low, it's sort of like a bit of a feedback loop, right? A low stock price, if they have a fixed amount of cash burn, let's call it what they said in the report, $1.5 million per month. If they need to raise $1.5 million per month at, 63 cents stock price, that's a lot that they have to sell and put on the market. All that selling pushes the price down, and so that's not great. If the stock, let's say, they get their FedRAMP approval, which, as I understand it, is more on a waiting game at this point. That I don't think it's directly in their control for when that happens. If they were able to get that, let's say that's a huge boost to the stock price, because people now all of a sudden realize they might have a lot of business in the future with the federal government. Then, the stock goes up to $2, $3, $4, over time. Let's say there's also some general, overall recovery in tech valuations. Maybe a cut in interest rates, like diluting at $4, or especially diluting at $10, is not the same as diluting at 64 cents, right? They can fund the company while having to sell a lot less shares. So anyways, that's the thing that I'm, that's my number one concern with the company. And then in terms of financial performance, I'm looking at margins. I'm really hoping, when we get the Q1 numbers in about a month, that, we can see, hopefully we get some visibility into this, ASR revenue, and that goes, back up to where I think it should be, from sort of all the other things that I'm seeing. And also hopefully their margins start to swing up. So I know, Jay and Wakaz, I don't know if you have any thoughts here. Give you a minute to talk through there. Let's see. I don't think I have anything else in my notes that I really wanted to go over today. I mean, I guess I could just mention real quick their operating expenses. I think I have a chart for that. Not that. Yeah, their operating expenses, for the quarter were up. The research and development, G&A, were up. Sales and marketing was slightly down, but overall our operating expenses were up. I'd expect that to go down, right, because of the layoffs they just did, and some of the, probably reduced spending on various pieces, as they're trying to cut costs. All right, I still don't see any chat messages, any more chats from Jay or Wakaza, or anyone else. So, oh, Wakaza says hold up. All right, I'll hold up. No worries. Like I said, that was all of my everything I had prepared. We did mention, that they did sign this contract or with the NYPD. I think this is it's a big deal. It's a big name for them to say they're working with the NYPD, and they said it's a pilot, and I think it'll be cool to see. While Kaza says weapon recognition is on their next to-do list. Yeah, I think they could certainly do that. I think they are. I think the image recognition they would need to do that is certainly feasible for them to do, and that'll be interesting. That'll be a good feature for them to have. And I think especially for I don't know. I think I think the weapon recognition is a really nice feature to tell people you have. I guess I'll be interested to see where that actually gets deployed and if that's useful. Because to be, just thinking over some of the places where they have it, they have a lot of deployments in parking lots. And I think they're using this, largely to both as sort of a physical presence there so that people know that it's being monitored. And are reminded of that, but also to monitor the cars and who's parking where and have some, know about the people, and do some surveillance. Yeah. Well, Kaza says I'll be investing again next month. Cool. And also I'll be speaking with the mayor of Honolulu in May. Oh, cool. Speaking about Knightscope, you mean? Because that'd be really cool. I mean, obviously that's huge. Yeah, I wish that. Sorry. Yes, it says yes. Cool. That's awesome. Well, I mean, feel free to send me a message. Let me know how that goes. I'd be real curious. I'm always curious to hear, um, what some of the clients or prospective clients really think. I would love to talk to some of the people who have deployed one of these, for 6 months or a year, and get the full scoop from them. At some point, I might bug somebody. I've done a little bit of research and kind of looked at one or two places where they do have them deployed and wondered if I'd be able to get a quick 10-15 minute chat with somebody, who works there. But yeah, it's real interesting to kind of think about that and talk to some of the clients there. So, all right, I am gonna hop off because I don't have a whole lot else to talk about today. While Kaza says they need to create an auxiliary div of foot patrol. Interesting. It's a bit out of my element. I don't know enough about that. Um, but that's cool. That's awesome. Yeah, let me know how that goes for sure. I don't know if I've ever mentioned you can go on my channel page and it should be in like an about tab somewhere with my email address. So you can contact me, right through there if you ever want to. Um, yeah. All right. I think I am gonna hop off then. I wonder if sometime we could be able to get I don't know, a call in thing on here. I'll have to look into that and see if I can get that set up. That'd be kind of cool if we could have some back and forth. Uh, I don't know, maybe a Google Meet or a Zoom call or something might work, but I'm sure there's a way to do it with some of the streaming services. So, anyways, all right, Mahalo. Walkaza says no worries, Mahalo, Dustin. Thanks. Absolutely, thank you for hopping on the stream. Hope you found something useful today. Hope you